Investors, hello! This is AI Crypto Insights, your home for a few minutes of AI-powered insight into the market. And just a quick reminder, this is for educational reference only, not investment advice. Today, I'm parsing a really interesting report from interactivecrypto.com by Joanna Newman, and it's called South Korean Crypto Crisis, $110 billion Capital Outflow, Where Does the Market Go From Here? Okay, let's just dive right in. Look at that number, $110 billion. That is the unbelievable amount of capital that just up and left South Korea's crypto market back in 2025. You know, this wasn't some minor market correction. This was a full-blown financial earthquake, and it sent shockwaves all around the world.
And honestly, we're all still feeling those aftershocks. This massive exodus has investors everywhere on edge. You can literally see it reflected in the market's Fear and Greed Index, which is sitting way down at just 29. Now, if you're not familiar, that index basically takes the market's emotional temperature, and right now, it's telling us that people are scared, genuinely scared.
But here's where the plot thickens a little bit. Despite all this fear that's just gripping the market, the big players, Bitcoin and Ethereum, they're actually holding their ground. They're even posting some small gains. So this creates this really fascinating tension, right? You've got the fear of these big regulatory crackdowns clashing with the underlying strength of these major digital assets.
So, to really get our heads around what's happening, we're going to break this whole thing down into 6 key parts. We'll start with the exodus itself, then we'll dig into what caused it, the ripple effects across the globe, what the experts are saying, the risks and opportunities for investors like you, and then finally, we'll take a peek at what the future might hold.
All right, so first up, let's unpack the main event. We're talking about a capital flight on a scale we have just never seen before from a single country's crypto market. This was way more than a headline. It fundamentally redrew the map of the global crypto world.
So, you gotta ask the big question, what on earth caused this? I mean, $100 billion doesn't just get up and move on a whim. The key here is to really understand the specific government policies that lit the fuse on this whole thing.
Yeah, this was no random market swing. It was a direct, powerful reaction to a whole series of pretty strict new regulations that came down from the South Korean government, and they were clearly aimed at clamping down, and clamping down hard, on the crypto market.
And this really shows the three-pronged attack that just made the market impossible for so many. First, exchanges were forced into these really tough bank partnerships. Then, users had to submit to mandatory real-name ID checks. And then, on top of all that, they slapped a hefty 20% capital gains tax on profits. It was just too much for a huge chunk of the ecosystem to handle.
And the impact? It was immediate and absolutely devastating. The report from interactivecrypto.com points out that over 60%, think about that, more than half, of South Korea's smaller crypto exchanges just had to shut their doors for good. They simply couldn't keep up with these new rules.
Now, a crisis this big, well, it didn't just stay inside South Korea's borders. That $110 billion had to find a new home, and its journey created some major shifts across the entire crypto world. And that money didn't just vanish into thin air. It flowed like water, finding the path of least resistance. In this case, that meant nearby countries with friendlier, more predictable rules. And as a result, both Japan and Singapore saw their trading volumes just explode as they welcomed all that capital fleeing Korea.
But this wasn't just about moving from one country to another. It was a philosophical shift, really. Investors started moving their assets to platforms that were outside the control of any single government. And that gave a massive, massive boost to the world of decentralized finance, or DeFi, where everything runs on open networks instead of old-school banks.
So, an event this big obviously got everyone talking. All the major figures in finance and crypto had something to say. Let's tune in and hear how they're making sense of this crisis. Michael Saylor, who I'm sure you know is a huge Bitcoin advocate, he sees this as a natural step in the market's evolution, even if it's a painful one. He's basically saying this is globalization in action. Capital is just going to go where it's treated best, and that competition will force the entire industry to grow up.
And it's not just the crypto insider saying this. This take from a JP Morgan analyst backs up that trend we just talked about perfectly. He's predicting that this move away from government-controlled exchanges is going to fuel a serious boom for the DeFi space over the next year.
Okay, so how does a massive event like this actually affect you? Let's get down to brass tacks and break down the real risks and potential opportunities that have come out of all this chaos. All right, here's what you need to be watching out for. The market is way more volatile now and super sensitive to whatever governments around the world might do next.
We're also seeing liquidity, which is the lifeblood of markets, just drying up for smaller altcoins that depended on Korea. And there's this looming risk of a domino effect, right? What if other countries decide to do the same thing?
A quick peek at the technicals for the market leaders shows this tension playing out. Bitcoin's relative strength index, the RSI, is at 70. That's getting close to what's called overbought, and it could mean we see a short-term pullback. Ethereum, on the other hand, has a more stable RSI, and it's being supported by that very DeFi ecosystem that's actually benefiting from all this.
But hey, all this fear in the market also creates some real openings. Widespread panic can make really strong assets look cheap, creating some potential buying opportunities. The DeFi sector, like we've been saying, has enormous growth potential right now. And finally, you've got new entry points popping up in markets like Japan and Singapore as they soak up all this capital.
So with all these pieces moving on the board, what's next? Let's look at a few ways this could play out, based on analysis from financial sources like Bloomberg. Based on the current data, my analysis is pointing to 3 main scenarios for Bitcoin by the end of 2026. The most likely path, with a 50% probability, is a neutral case, where the market just finds its balance around the $90,000 mark. Then you have a 40% chance of an optimistic run-up to $120,000, and a much smaller 10% chance of a pessimistic, regulation-fueled drop-down to $70,000.
AI analyst verdict. The South Korean exodus is a critical stress test, forcing a global redistribution of capital and accelerating the clash between sovereign control and decentralized innovation. What are your thoughts on this? I'd love to hear them. Share them in the comments. See you in the next episode.